Hello and assalamu alaikum everyone. This is Kashif Kamran, your tutor. A very warm welcome to the Advanced Audit and Assurance Practice to Pass webinar for September 2021 exams. Today is the day 3 of this webinar. Now, just before I start on with the proceeding, do tell me, is my voice getting clear to all of you? Okay, that's great. So if my voice is getting through to all of you with clarity, let's resume with the day 3 of this Practice to Pass webinar. Now, the agenda for day 3, the 5th of August, is completion and reporting stage. But just before we start the completion and reporting stage, we have some uncompleted agenda from the day 2 yesterday, where we were discussing the quality control issues. So I'll start first with the incomplete agenda from yesterday, the day 2, and then I'll pick up the day 3 agenda. So that's what I am focusing on day 3, the continuation of the day 2 agenda plus the day 3 agenda. Now, just a quick recap. Yesterday on day 2, towards the end of the day 2, we started discussing the ethical, professional and quality control issues. I recommended you some articles to read, and we particularly started with a drill of the March-June 21 question number 2, and that's what I will be continuing today initially in my session. Now, just before that, in the session yesterday, I read the examiner report with you from the recent exam, the June 21, and we found some very constructive criticism of the examiner when it comes to writing the quality control issue in the exam paper. And I was very clear about drilling with you the requirement of September-December 20 question, number 2, and March-June 21 question number 2. We read the requirements. I give you the way to read the requirement. What exactly is in the requirement? What is the requirement asking you? So we were very clear on reading the requirement, understanding the requirement, and what exactly you need to do when you look at a requirement like such, which we were looking for in the session yesterday. Now, if I just take on my Word file, which I use for every day, and just for a minute, if I go to the preceding Word file, which I was using yesterday on the day 2, just to ensure a quick recap of things before we start getting to the day 3 agenda. Yesterday, in my day 2, we went across the examiner criticism, and that was very, very important. You got notes of that, and this file has already been shared with all of you. So I hope you've read this criticism and revised this criticism, because that's very, very important. We also went across the nature of the question, which comes on ethical, professional and quality control issue. And I did discuss with you the marking scheme as to what a student should be doing when it comes to ethical, professional and a quality control question. Now let's start on with the agenda for the day 3, where we left the day 2. And the objective today for day 3 is to continue first with the March-June 21 question number 2, plus then we'll start with the completion and reporting stage later. So that's what we are looking for today. Now let's first continue with the March-June 21 question. Let's understand something more from the March-June 21 question using the practice platform, and let's see how we go about doing the question. Now, if I can just open the practice platform for you. I hope you can see in front of your screen the practice platform. We did started to write the answer on the word processor yesterday in the day 2, and I put the heading question number 2. We copied the requirement of the question number 2 on the word processor, and then we started to read the first subsidiary of the group, which was the Cameron company, and we had 8 marks for Cameron company. When we were reading the exhibit for Cameron company, we did find multiple issues. The first issue we found was that Cameroon company also outsourced its internal audit function to Kerry. So Kerry was the auditor, and they have also outsourced the internal audit function to Kerry. Second problem we got from the case was the Kerry associate was relying on the internal controls, knowing the fact that the internal controls have been tested by the same audit firm. Then we got to know that one of the partner of James Company, which is a group auditor, has recently left James Company and has joined Kerry Associate. So there was a significant familiarity threat there. Then we got to know that uh, there is nothing else on the file in relation to firm. You have not done the independence, experience, and competence checking of Kerry Associate, knowing that your partner is working there. So you avoided the way you should have checked the component auditor. Then the last point we got that was the group partner. The group partner was saying that the international financial reporting standards and the local standards are very much the same. So there is no need to perform any additional work in relation to consolidation. Now, you need to agree with me. I need a quick answer from your side. I did mention to you, when a question comes on quality control and professional issues and even ethical issues, even if the question is not asking for actions, will you still be writing actions as part of the issues you are raising in the question, right? So is it compulsory to write an action for every issue? No, right? You can have more issues and you can have less actions, but don't forcefully write action for every issue you are raising, right? Now, we got these issues yesterday for Cameroon company. I'm just taking them on my Word file. And these are the issues we identified from the Cameroon company yesterday. So let me copy paste these issues on my Word file here, so we can do a very proper analysis of these issues. Now, if you look at these issues and we go one by one, the first issue we got in the case of Cameroon company was that they outsourced their internal audit function to the same audit firm, Kerry Associates. So let's first start with the heading internal audit function, and let's see what is the issue with internal audit function. So I'll first give a heading. You need to solve it on the practice platform. I'm solving it on the Word file here, just to ensure that you get this as an end document of the webinar. So I put the heading Cameroon company. Under the Cameroon company, the first problem is internal audit, and under the internal audit we start to write. So Cameroon outsourced its internal audit function to Kerry Associates. That's the first problem. Now the first thing is that you need to explain what is the problem here, or why it is a problem, why internal audit function to Kerry Associate is an issue. So you speak of the issue and you write an issue that if Kerry Associates offer both external as well as internal audit services to Cameroon, it give rise to self-review threat. Will the examiner give me any marks if I say will give rise to a self-review threat? Examiner was not happy, right, that we just pick up the threat. Examiner likes us to explain why it is a threat, right? So just make me clear that my voice is getting through to all of you with clarity. Okay, that's great. Thank you. If Kerry Associates offer both external as well as internal audit service to Cameroon, it gives rise to self-review threat, because in subsequent audits, the audit team will be reluctant to review the internal controls, or will be over relying on internal controls, knowing they have been reviewed by the same firm. So will you become reluctant when you come to the audit in the subsequent years? You will not be performing any check and balance on internal controls, or you will be over relying on the internal controls knowing they have been reviewed by the same firm. So will that be, is that an explanation of a self-review threat here? So every time when you write in the exam paper, self-review threat, you will not get any marks if you just pick up the threat till the time you write because the because is the explanation of the threat. See my explanation of the threat. So every time when you write an issue, you need to explain why it is an issue. So it is a self-review threat that is an issue. But why it is a self-review threat? I justified that by writing a because. So now that gives me a complete 1 mark here out of the 8 marks. Then the second problem in the same situation, internal audit, we were performing this post issuance, right? This was post issuance when the report has been issued. The question was not telling us whether they have used different teams for internal audit or they have used different teams for external audit. The question was silent on that. So we can tell examiner, it is not clear. It is not clear because the question is silent. So you're telling examiner, it is not clear from the case paper whether whether Kerry has used different teams for internal and external audit engagement. The report has already been issued, right? And the question is not telling us anything about whether different teams have been used as a safeguard of a self-review threat or not. So you are saying it is not clear from the case paper whether Kerry has used different teams for internal and external audit to mitigate the self-review threat. So see, when the question is silent, how you write an answer? To mitigate the self-review threat, rather than you take an hypothetical assumption. I cannot take an hypothetical assumption because the question is silent. So I simply telling examiner, it is not clear from the case paper whether Kerry has used the teams or not to mitigate the self-review threat. So I cannot do any comment on this. So this is a sort of an action I'm telling to the examiner, but I'm not recommending they should use a different team. I'm saying it's not clear whether they have used it or not. So I'm giving a hint to the examiner that an ideal safeguard for a self-review threat is to be having different teams. But whether they have used it or whether they have not used it, I'm not commenting on it. Full stop, and you come to the next paragraph. Now, the other issue is in the order is we can rely on internal controls as they were tested by our firm in May 20x4. So see, they are relying on the internal controls because they know that the internal controls were tested by the same firm, Kerry Associate, in May 20x4. So let's put the next heading, internal controls, and let's write under internal controls. Now you need to understand one thing very carefully. This is a judgment, right? We can rely on internal control. Now, this is the judgment of the Kerry Associate, the component auditor. And the component auditor is saying we can rely on internal control as they have been tested by our own firm in May 20x4. Now, I want to give you a relevance here as they were tested by our firm in May 20x4. You go back to the case study and you open the exhibit. Just 1 minute. See, what is the financial year end for which we are performing the audit? Can you all look at this financial year end on the screen? I'm highlighting it in yellow. The financial year end for which we are performing the audit is 31st of January 20x5. Can you all see that? Can you all see that in yellow? Please confirm that. Okay, so what is the financial year end for which we are performing the audit? 31st of January, right? And when was the internal controls reviewed by the internal audit department of Kerry Company? When was the internal controls reviewed by the internal audit department of Kerry Company? In May 20x4. So that's how much time before the year end? How much time before the year end have they been reviewed? June, July, August, September, October, November, December, January. That's like 8 months before the year end. They have been reviewed by the same audit firm. What if there have been some changes from May to January? What if there has been some adjustments in the internal control from May to January? Have they reviewed them? What if some designs of the internal control system have changed in the 9 months or 8 months up to the year end? So are you understanding my point, everyone? So when was the internal controls reviewed? They were reviewed in May 20x4. What is the year end for which we are performing the audit? January 20x5. So what about the gap? What about the gap? Something can change, right? Something can change in the gap. So have we took the right decision of just relying upon the internal controls which were tested in May 20x4? We didn't bothered about testing them from from June 20x4 to January 20x5. Is everyone clear on this point? Is everyone getting the dates, May 20x4 and January 20x5? Right, so 20x5 is ahead, right? Hamza Khan, 20x5 comes after 20x4. So May 20x4 and January 20x5. They've checked controls up to May, but they've not checked controls in June, July, August, September, October, November, December, January. So they've not tested controls for a very substantial period of time. So that's the problem, right? So let's go back to the Word file where I was drafting the point. So in the internal control, they say we can rely on internal controls as they were tested in May. So we have to criticize this. The internal controls were tested by Carey Associates in the month of May 20x4. In the month of May, up to the month of May, sorry, was tested by Carey Associate up to the month of May 20x4, whereas the year end is January 20x5, for which the audit is being performed, for which the audit has been performed, because the report has already been issued. This means no control testing has been performed for last 8 months prior to the financial year closing. This means that no control testing has been performed for the last 8 months because the report has already been issued. This means that no control testing has been performed for the last 8 months prior to the financial year closing by the audit firm, and any changes in the internal controls in last 8 months. Is my voice getting to all of you? And any changes in the internal controls in the last 8 months has gone unchecked and undocumented. So that's the issue, right? So we tested controls up to May 20x4, not after that. So in the last 8 months, no control testing has been performed. So anything changed in the internal control, any design changed in the internal control, any weaknesses identified in the internal controls in the last 8 months have gone unchecked and undocumented. That's one problem. The second problem is you are telling the action. Internal controls should be regularly reviewed by the audit firm, as part of internal control testing each year, at least each year, to ensure there are no changes in the design and operations of the system. So you cannot skip to perform internal controls each year. Internal control should be regularly reviewed by the audit firm as part of internal control testing each year to ensure there are no changes in the design and operation of the system. And if there are changes, then you should perform the test of control on the changes. So can you skip the review of the internal control system any year in the audit? No. Right? So internal control should be regularly reviewed by the audit firm as part of testings each year to ensure there are no changes. So have the audit firm done this? They have not. So you are giving a suggestion that this is what they should have done, right? Full stop. So that's one sort of an action you're writing to this issue of internal controls. So you need to understand that evaluating internal controls is a regular exercise, and when you come for audit each year, you should review the internal controls. Now the problem over here is that the same firm is offering internal audit, the same firm is offering external audit, so you are placing over reliance on the work of your same firm, and that is causing the problem. So you are not exercising the professional skepticism as an external auditor, which you should have exercised. I hope you're all clear with that. Okay, let's look at the last problem, because I need to read another case with you. There was another problem that one of James' audit partner has left and joined Kerry Associate. I hope you all recall that from the session yesterday, because there was a break between day 2 and day 3 now, but I hope you recall. One of James' company audit partner, which is a group auditor, has left the firm to become an audit partner at Kerry, and he is involved with the audit of the Cameroon company. Now we know that gives rise to a self-review threat. So let's write engagement partner as a point, and under the point of engagement partner, we explain to the examiner the engagement partner left James and joined Kerry, and has been involved with the audit of Cameroon, has joined Kerry, give rise to a familiarity threat. Because the group audit team, when performing review of the component auditor, or communicating with component auditor, they will be familiar with the engagement partner. They will be familiar with the component engagement partner, which will result in losing professional skepticism, and due care. Is everyone hearing me? So the engagement partner left James and joined Kerry, right? This gives rise to a familiarity threat, because the group audit team, when performing review of the component auditor, or communicating with the group component auditor, they will be familiar with the component engagement partner. So when you are liaising as a group auditor with a component auditor, do you know the partner of the component auditor? Do you have a familiarity association with the partner of the component auditor? Will that result in losing professional skepticism and due care into how you review the work of a component auditor, or how you liaise with a component auditor, right? Yes, exactly, Rima. It can also give rise to an intimidation threat. But currently, because the group auditor is different and the component auditor is different, so the intimidation threat would be mitigated substantially. But currently, the familiarity threat is of a major concern here. We normally know that whenever there is a familiarity threat, intimidation threat is something by default, but I'm not going down explaining the intimidation threat in the context of the webinar. So that's one issue, right, with the engagement partner. Now, the second problem is that the partner left, there was a familiarity threat. Then what happened exactly? What happened was the next point. Have we performed a proper review of Carey Associate? Have we performed a proper review of the independence, competence, and experience of Carey Associate? Because the next point says, here is nothing else on the file in relation to that. I hope you remember the session yesterday when we was reading the case of Cameroon. We have not performed a proper check and balance on Carey. So the next point, and under the engagement partner, due to the familiarity with due to the familiarity threat as discussed above, the group auditor James Company failed to perform a proper check of Carey, independence, a proper check of Carey independence, experience, and competence. Right? Due to familiarity threat, as discussed above, the group auditor James Company failed to perform a proper check of Carey independence, experience, and competence, rather undertook this exercise very casually, and the way the check has been performed is inadequate. That's one issue. So the way you've performed the check on Carey was very bad, was very casual, was very inadequate. You wrote an action for that. So are you understanding how I'm going down putting my points? Do you look at my 1 mark answer? Every time I'm writing a paragraph, I'm trying to justify why it is an issue. None of my answer is without why. I hope you're all getting that perspective. So I wrote a point internal audit. I wrote a point internal control. I wrote a point internal controls again, engagement partner. But anywhere in my answers so far, so forth, have I wrote the partner left and joined Carey? This results in a bad quality audit. Or they have not undertook the check on independence, experience, and competence. This is a bad quality audit. No internal controls have been performed for the last 8 months. This is a bad quality audit. Have I wrote the word quality anywhere in my answer? Or was I just focused on picking up the issue and explaining why it is an issue? Rohit, I did make that clear on day 2 that even if the question is not asking for actions, you should give action if the question is on ethical, professional, and quality control issues, right? So have I just went with issues and explaining why it is an issue? Anywhere in my answer, do you see the word quality? Do you see the quality has been compromised? Do you see the bad quality, anything like such? So was I just focused on issue and the explanation of why it is an issue? Or was I more concerned with writing again and again that the quality is bad, the quality has been compromised, something like that? So examiner was criticizing us yesterday that students, when they write answer, they write a typical statement, audit quality is poor or audit quality is bad. And examiner was not happy with that, right? So you complete this first issue, Cameroon, as your assignment. I just given you a guidance on how you go about raising issues in Cameroon. We identified the issues yesterday, and I drafted some of the issues for you just to give you a relevance how you draft a 1-point answer. Now, after Cameroon, once you complete Cameroon, you go back to your exam paper on your screen in front. And after Cameroon, you have the next situation, which is Marsh Den Company, which is another subsidiary. Okay, can you all see the Marsh Den Company in front of your page? The next subsidiary, if you can identify the issues for this subsidiary as well, quickly and wrap up the answer. No, Hamza, we have not drafted enough for 8 marks. This is a webinar, right? I cannot just draft everything for you. See, how many marks have I drafted for you? I have drafted 2 marks under internal audit. I've drafted 1 mark under internal control. That's 3. Another 1 mark under internal control, 4. Under the engagement partner, I've drafted 2 marks, 6. I've drafted 6 out of 8 marks for you. every paragraph end, Hamza, I've given you a mark 1. So you can catch up the number of marks given out of the total 8. So you have to complete the rest of the answer yourself, right? Yes, exactly. You can write in the paper, case paper, as I wrote above, right? Okay, you go back to the next situation. Is everyone ready for the second situation, Marston Company? So you open your word processor and you put the next heading, Marston Company. And in the Marston Company, you start reading the case, and any problem you identified, you will start putting it under the Marston Company. Okay, let's read the Marston Company, right? Marston is located some distance from the rest of the group and is audited by the local office of James Company. So do we have the same auditor? James Company is a group auditor, and James Company is also the auditor of Marston Company. So do we have the same auditor here? Everyone? So is the same auditor performing it? Yes. Your review has found that there was no formal reporting from the subsidiary audit team to the group team, and the communication were often not documented. Do you believe this is the first issue? Your review has found that there was no formal reporting from the subsidiary audit team to the group audit team, and the communications were not often documented. Do you believe there has to be a proper communication between the group auditor and the component auditor, whether they are the same firm or they are dissimilar firm? Even they are same firms or they are dissimilar firms like Cameroon Company, you need to ensure there is a proper communication and there is a proper formal reporting between the component auditor and the group auditor, whether the component auditor is the same firm or the component auditor is a dissimilar firm. So should I copy this point, Control C, and should I take it on my word processor as my first issue under the Marston Company, and I paste it over here in the exam context? Next, you go back to the Marston Company. There was no evidence that the group audit team had obtained a copy of subsequent events review performed on Marsden Company. Is that another issue? No evidence that the group audit team has obtained a copy of the subsequent event review performed by Marsden Company. Do you understand? Subsequent event review is so important for every component or every subsidiary of the group. Can the subsequent events impact the group audit? Can the subsequent event impact the consolidated financial statements? So there is no evidence that the group audit team has obtained a copy of the subsequent event review performed by Marston Company. Control C, that's the second issue. And you go back and you paste it over here in your word processor as the second problem. Control V. See how easy computer-based exams are. You can copy paste and then develop your point. And there was no evidence that the group related parties had been communicated to subsidiary team. There was no evidence that the group related parties are communicated to the subsidiary team. So will the subsidiary auditor know about the related parties? What if there is a transaction between the related parties at a subsidiary level? Does the subsidiary auditor has any information about the related parties? So will the subsidiary auditor gather any evidence about related parties because they don't know about them? So many times the examiner used the word no evidence, no evidence. So the moment you see the word no evidence, that automatically becomes a problem. So how many issues we have here in this small case of Marston Company? 3. See, you copied them. Now you need to develop them into an answer. 3 issues. If we write 3 issues and 2 actions, we'll get to 5. So that's not a difficult task, right? So let's copy these 3 issues I found for Marston Company, and let's take it on my word processor, and let's write an answer on my word processor for Marston Company. So you found the issue, that's the first target. After you found the issues, your next target is to convert the issues into a proper answer. So first read, then plan, and then write. Read, plan, write. So if read, we plan, now we're writing. Your review has found there was no formal reporting from the subsidiary team to the group team. So no formal reporting. That becomes the first heading. Under the no formal reporting, you raise the issue. Your review found, number 1, there was no formal reporting from the subsidiary team to the group team. So a subsidiary team to the group team. And you write under. There should be a proper correspondence and reporting between the group auditor, between the component auditor, between the component auditor and the group auditor. And the component auditor should keep group auditor up to date of any issues or problems in the component audit. So you started with an action first. You're telling your review has found there was no formal reporting. So you're telling examiner there should be a proper reporting, there should be a proper correspondence between them, and then full stop. And then after the action, you come to the issue. So you have different ways of writing answer. Sometimes you start with the action first and the issue after. So the question was saying your review has found there was no formal reporting. So you started with the action first and now you come to the issue. If there is no formal reporting between the component auditor and the group auditor, it means lots of issues or problems at the component level had not been communicated to the group auditor, and the group auditor could be unaware of the issues at Marsden company, as it is a significant subsidiary. I hope you read the case yesterday. Examiner told us that every subsidiary is significant. So Marsden company is also a significant subsidiary, and because there is no formal reporting between the component auditor and the group auditor, it means that lots of issues or problems at the component level had not been communicated to the group auditor, and the group auditor is possibly unaware of the issues at the Marsden company, and as it is a significant auditor. Right? So that's the issue. So there is no formal reporting between the component auditor and the group auditor, right? So the group auditor is unaware of the issues at the Marsden company, which is the subsidiary. So any issues at Marsden company, any problems at the Marsden company being a component, you will be unaware of it. So that's the first issue. 1 mark. So you got 2 marks under the first. The next, no evidence that the group audit team has obtained the group audit team had obtained a copy of subsequent events. So next heading will become subsequent events. You tell examiner there has been no evidence that the group audit team had obtained a copy of subsequent event review performed on Marsden company. This means if there is no evidence that the group audit team had obtained a copy of subsequent event review performed on Marsden company, it means that the group auditor has not considered the impact of the subsequent events. The group auditor has not considered the adequacy of evidence gathered by component auditor on the subsequent events. You should have reviewed them, right? You should have reviewed them as a group auditor so to know that the work performed by the component auditor on subsequent event is adequate. It means that the group auditor has not considered the adequacy of evidence gathered by the component auditor on subsequent event and has not considered the impact of any subsequent event at the component level on the group consolidated financial statements. Is it a significant subsidiary? What if there is a significant subsequent event at a component level? Will that significant subsequent event at a component level impact the group financial statements? Definitely. But did you bother about reviewing the subsequent event? Do you have any evidence that you reviewed the subsequent events performed by the component auditor? So I think the group auditor is not playing the role expected out of the group auditor. So there is no evidence that they reviewed the subsequent events performed by the component auditor. That means you are unaware of the subsequent events happening at the stage of the component entity. And that means there might be a very significant subsequent event which must have gone unaddressed. So that's the issue. Then you write the action for subsequent events. It is the responsibility of the group auditor. It is the responsibility of the group auditor to review working papers of potential risky areas and important areas of each significant component to ensure all significant matters are known to the group auditor. All significant matters are known to the group auditor and has been adjusted in the consolidated financial statement if needed. So you wrote an action, 1 mark. So I've wrote a 4 marks answer for you and you continue writing the rest yourself. But I hope you're getting a track here, everyone, that throughout my answer, I almost wrote a 4 marks answer for Marsden company and I almost wrote a 6 marks answer for the Cameroon company. That's like a 10 marks answer. But anywhere in my 10 mark answer, I didn't bother about using the terminology quality. I didn't bother about telling it is a bad quality. I was just focused on picking up the problem and justifying the implication of the problem or justifying why it is a problem. So anytime in the exam paper, you need to understand one thing quickly before I tell you how you write a conclusion. Now, this is something very important for the student. Note it down carefully. A student guidance, let's put that in red. That's very important. And you should note it down very, very carefully. Student guidance. Listen to me carefully. When you are attempting a question on ethical, professional, and quality control issue in continuation from the session yesterday, first read the case carefully and pick up the issue, whatever the issue is, whether it is an ethical issue or it's other than an ethical issue. First read the case carefully and pick up the issue. Having picked the issue, now think why it is an issue. You picked the issue, right? You picked the issue, right? So if you picked the issue in exam paper, then you have to justify why you picked the issue. So having picked the issue, now think why it is an issue. Muhammad Arsalan, when the tutor is conducting a webinar, your focus is to teach a topic. So if you put some very lengthy questions and you expect the tutor to respond to them during the live webinar, that's impossible. And that is the reason for every webinar conducted, there is a WhatsApp group. So that is an opportunity that you can put your question on the WhatsApp group and expect that the tutor replies to them in after completing the webinar. So in the webinar, if the tutor is asking you a question, you should respond to him. You should say yes and no so that I know you're understanding it. But if you have a question, please put that on a WhatsApp group, right? Because you're raising a lot of questions and it's very difficult for me to focus on the question. Either I can focus on the word file or I can focus on your question. I hope you're clear with that. Student guidance. First, read the case carefully and pick up the issue. Having picked the issue, now think why it is an issue. Explain the issue considering the implication of the issue on audit, whether the report has been signed or the report is to be signed. Consider the implication of the issue on the audit, as we were considering above. So that's how you're going down with it. Pick up the issue, now think why it's an issue, and explain the issue considering the implication of the issue. A well-explained issue could be 2 to 3 sentences long. Could be 2 to 3 sentences long maximum. So that is one well-explained issue could be 2 to 3 sentences long to fetch 1 mark. I hope you're all clear on that. And recommend an action where necessary. Where necessary, there can be some issues without action. Don't forcefully write action for every issue. Write action for every issue. Is that clear? Is that summary guidance clear to all of you? Will that help you a long way in writing an answer for ethical, professional, and quality control issues? Now, listen to me carefully. When we were reading the examiner criticism yesterday, examiner was saying you should give a conclusion at the end of the day, right? Now, look at this question. We started yesterday on the day 2, and the question basically was, the question was saying comment on the quality, right? So when you are answering a question like such, you first answer a question like this. See, this is how the format would look like. You go back to the, see this. You first put Cameroon company, you then put Marston company, you then put the next one, Dean company, you then put Honor company. Now, once you complete the answer, you will give a conclusion at the end, because the question was asking you comment on the quality of planning and performance of the group audit. Now, can we comment as a conclusion? The overall group audit, the overall performance of group audit seems to lack quality, as there are numerous instances as discussed above for each subsidiary, where the role of the group auditor was not well performed, and there were instances where the group auditor breached the responsibilities expected from the where the group auditor breached the responsibilities, when there were instances where the group auditor breached responsibilities needed from them. Full stop. See, this is a conclusion. You're just telling examiner that the overall performance of the group audit seems to lack quality because there were numerous instances in Cameroon, Marston, Dean, and Honor. You're not repeating those instances, right? As discussed above for each subsidiary, where the role of the group auditor was questionable. Have we found some questionable role of the group auditor in Cameroon company, where the engagement partner was giving some very wrong advices? We found some issues with Marston company, where the group auditor was not bothered about obtaining evidence about subsequent event. there was no proper communication between the group auditor and the component auditor. So see, this is the conclusion one at the end. So you copy this conclusion and you take this conclusion to your Word file and see, this is the conclusion at the end of the answer. The spellings and grammars are not checked, so don't be worried about it. So if you make a spelling mistake, no need to correct it. Obviously, I can correct it in the session, but that's not your responsibility in the exam paper. So can you find this conclusion? Is that what the examiner was looking for yesterday when we were looking at the criticism here? See this criticism of the examiner right on the screen. Look at this. It is important to remember that in a AAA exam is predominantly the application, and as such, journal comments will not obtain credit. Often these will be restricted to a single concluding mark across the full question. And as such, candidates cannot obtain additional marks for repeating the same conclusion. So have we given a single concluding mark across the full question at the end? So the role of the group auditor was questionable in the whole audit, right? There were lots of instances where the group auditor has not played the role, whether there was no documentation, whether there was no proper communication, whether they have not tested the subsidiaries' independence, competence, and experience, whatever. So when you write the full answer, at the end of the answer, give a conclusion. And conclusion should not be more than one sentence long, because conclusion is the summary. Whenever the student write a conclusion, the student starts to write another answer. See, my conclusion is just one sentence, one full stop, and that's conclusion. Examiner is saying you can get 1 mark for this, 1 mark here as well for conclusion. Is that clear to all of you? So from day 2 to day 3, the examiner report, examiner criticism, the way you read the question, the way you identify the problems, and the way you write them. Are you all clear on that? And you need to watch my previous webinars on ethical, professional, and quality control issues, which I have recommended you yesterday. I hope you watch these webinars at these hyperlinks, June 21, March 21, and December 20, because in each of the previous webinar, I have touched upon a different question. This time around, I'm more focused on doing the latest paper. So if you watch the previous webinar along with this one, it will really benefit you in terms of writing a very good answer to a question on ethical, professional, and quality control issues, and you will not do the silly mistakes which your examiner doesn't like. Is that clear with the day 2 agenda? This was a continuation of the day 2 agenda, and now we are starting with the day 3. Is that clear? Should we move on to the agenda for day 3 now? There are lots of presentation slides for you. You can read through them and understand things by watching the previous webinars. I've put some content on my presentation slides for ethical, professional, and quality control issues, which is a self-read material, and you will be able to understand this. And I've also given you the marking scheme. Okay, now let's come to the day 3. Okay, so is everyone ready for the start of the day 3 specific agenda? A look inside question number 3 of the recent paper, and more interestingly, to talk about a very important topic in the AAA paper, which is completion and reporting stage. So let's start with the day 3 specific agenda, and you need to listen carefully for the first 15 minutes, because that would be a real big breakthrough. Okay, let's take on the fresh page and let's start with a specific agenda now for day 3, which is to look at the completion and reporting stage. Completion and reporting stage of AAA paper. Okay, let's start with this. Okay, now understand something very carefully. When you look at the past papers, you know that your 100 marks paper has a section A and a section B, right? When you look into the section B of the AAA paper, and we are talking about since September 2018, when the new format came in, right? We know from the September 18 exams, we used to have 3 questions in the paper. Before September 18, we used to have 5 questions in the paper, right? So since September 18, when we had 3 questions in the paper, and we look at the section B. Now, section B has 2 questions. We have question 2 and we have question 3, each worth 25 marks. Now, in the last 2 exam sittings, which is September, December 20, and which is the March, June 21, the last 2 exam sittings published on ACCA website. In these last 2 exam sittings, examiner has now made the question number 3 as a completion and reporting question. As a completion and reporting question. Which is very logical, right? The question number 1 is a planning question. So examiner is going in a very logical order now. The question number 1 is a planning question. And the last question of the paper, question number 3, is a completion and reporting question, right? Now, when you look at the exam sittings other than the recent one, suppose you look at the September 18 exam sitting, you look at the December 18 exam sitting available, you look at the March, June 19 exam sitting available, you look at the September, December 19 exam sitting available, you look at the March 20 exam sitting available. In all these exam settings, examiner has used the question number 2 as the completion and reporting question. But in the last 2 recent exam sittings, or in the last 3 or 4 recent exam sittings, because we're looking at a hybrid paper, September, December, and March, June, examiner has now made the question 3 as a completion and reporting question. But when you look at these exam papers, over here, the question 2 was completion and reporting. So don't get distracted. I believe when you look at the September 21 exams, actually, there will be a question 3 on completion and reporting, because that's the recent track of the examiner. Now, irrespective whether you get a completion and reporting question in 3 or 2, you have to understand that a completion and a reporting question is a mandatory part of a 100 marks paper, right? Completion and reporting question, completion and reporting stage question is a mandatory part of the AAA paper. Just like a question on risk, just like a question on audit risk and risk of material misstatement, or a business risk. So just like you have a default question number 1, you have a default question on completion and reporting. But I think the examiner has now made the right track of the AAA paper. The first question is a planning question, and the last question is a completion and reporting question, which is very logical. And the middle question, the question number 2, can be from anywhere in the syllabus. The middle question can test any syllabus area. It can test other assignments. It can test ethical and professional issues. We just saw the 2 questions, the question number 2s, right? In one of the question 2, we had quality control issues in March, June 21. And even in the September, December 21, in question 2, we had the ethical and professional issues. But don't get distracted. In the question 2, you can also get other assignments. And I hope you know your other assignment syllabus area, which we will be covering on the last day of the webinar. Is everyone clear with the overview of completion and reporting stage and how important that is to pass the paper? Because it's something mandatory in your 100 marks paper. So you cannot be weak in this area. Now let's start with the webinar and let's see what we need to focus on. Now in this webinar, what I am focusing on? In this webinar, I'm focusing on the 2 recent papers, just to give you a guidance of the question 3 and the question 3 from the 2 recent exam papers, one being the September, December 20, which I will focus as my second priority, and one is the March, June 21, which I'll focus as my first priority, and will dig inside both to see what a question asks. What is the expectation of the examiner? What exactly a question 3 expects from a student? What is the marking scheme? What you should know to pass a question 3 of the AAA paper. So let's start the journey and let's start to understand one by one each one of them. And the break will come 30 minutes later at exactly 10 o'clock. 10 p.m. Pakistan Standard Time. So don't expect a break coming in the next 30 minutes. 10 p.m. the break will come. We are still into the live session because a lot of students are asking break. We're just into 1 hour, right? And you got frustrated. Okay, let's start with the analysis. What to expect at the completion and reporting stage. Okay, there are 2 articles I'm recommending. Exam Technique Article Part 5 and Auditor Report to Those Charges Governance. Now, these are the 2 articles which you should read after the day 3 comes to an end. Exam Technique Article Part 5 and Auditor Report to Those Charged with Governance. These articles are given to you in the handout section of the webinar. Then I would be doing analysis of the examiner report just like I did the analysis yesterday of the March-June 21 examiner report. I'll be looking at 2 questions, so question 3 from September-December 20 and question 3 from March-June 21. And any of the question left unattended, you will do it as your home assignment. And you will also watch the previous webinar on the same topic. Which previous webinar? I've recommended 3 webinars which are very good on reporting. March 21 webinar, the December 20 webinar, and the September 19 webinar. These are 3 important webinars you should watch. Because if you want to be good on reporting, you should watch every webinar recommended. Because there are so many rules in reporting, and I cannot cover every one of them in one webinar. So if you want to cover every reporting rule, you should watch the 3 preceding webinars along with this one. And that will give you a very good idea of reporting from the AAA perspective. I hope you will watch the previous webinars, right? Okay, now moving forward and looking at what to look at in a reporting and a completion question. Now, first of all, it is important to read through all examining team articles on reporting. Number 1, extract knowledge from the articles and maintain notes before you sit to practice. Now, I would suggest that first develop the notes on reporting. You should know the rules of reporting, because if you don't know the rules of reporting, you can do a mess in the answer. If you don't know when to use an emphasis of a meta paragraph, or you don't know when to use a CAM paragraph, or you don't know when to issue a qualified opinion or when to issue an adverse opinion, you are unclear about different rules of reporting. You can do a mess in a reporting question. So first read the examiner articles, watch my webinars, make your notes. Once you know the notes have been prepared, now sit down and practice. And practice the recent papers from September 18 to June 21. When you are practicing, read examiner reports, because examiner reports will be very, very productive from September 18 to June 21, because they will give you constructive criticism of the do's and don'ts. Be aware that reporting question is not just asking for an impact on opinion. It's at time broader and include actions, methods, critical appraisal of the report, and even impact on the audit report. So if you just go to the exam hall expecting that a reporting question will ask you just an impact on an opinion, just an impact on the opinion, you're taking a very narrow version. You're taking a very narrow version of the reporting question. You should solve the past papers on reporting, and you will imagine that the past papers on reporting is not just an impact on opinion. At times, a reporting question asks you actions. At times, they ask you matters. At times, they ask you a critical appraisal of the report. And at times, they ask you an impact on the audit report, not just opinion. And in my previous webinar, I did make a clarification. What is impact on opinion and what is impact on audit report? So you need to watch the previous webinars for that. So be careful about the depth of a reporting question. Understand the difference between impact on opinion, understand the difference between impact on the financial statements, and understand the difference between an impact on report. These are 3 different terminologies in a reporting question. At times, the examiner asks you, explain the impact on opinion. At times, the examiner asks you, explain the impact on the financial statement. And at times, the examiner asks you, explain the impact on audit report. you should know the difference of the terminology. Opinion, financial statements, and report. They cannot have the same answer. So in my previous webinars, I've recommended you, I have carefully constructed the difference for student. So please watch it and be clear. You should be clear with the reporting requirements, and you should be clear with the reporting rules to be good in a reporting question. But if your rules are bad and you don't know what comes in the past paper, you don't know the requirements of the reporting question, you don't know the rules of the reporting question, you will fail in a reporting question. Right? So it's very, very important. Mohammed Hasib, you need to watch the previous webinars for what is impact on opinion, what is impact on financial statement, and what is impact on audit report, because I've covered these things in my previous webinar, so I will not be repeating them. You have a library of webinars, right? So that is a wonderful resources you have by ACCA Pakistan. You can just go down, watch them, and these libraries are benefiting hundreds of students, or rather thousands of students globally. Okay, now knowing the report, knowing the understanding of the report, knowing the steps in front of your screen, let's start the analysis of this webinar in terms of reporting. Now let me open the questions for you first. Let's go down and look at the reporting questions. Now, first thing which you need to understand is that our reporting question, a question 3 or a question 2 set at completion and reporting stage is not just a question asking you your reporting knowledge. The 25 marks question, whether it is 2 or 3, is not just asking a 25 marks reporting knowledge. It is a combined question. Try to understand this. It is a combined question. It is not just a reporting question. It is a completion and a reporting stage question. So in the 25 marks, there will be certain marks from completion and there will be certain marks from reporting. So it is not just a question which is asking your reporting knowledge. So be very careful, right? Now, if you look at the question number 3 of the March-June 21 exams, just to see how diversified that was, and just to be very sure, it was not just a reporting question. Let me show that you on the practice platform. I hope you can all see the practice platform in front. Let's move from the question 2 to the question 3. I hope you can all see the question 3 now in front of your screen, right? Can you confirm that? You can see the question 3 in front of your screen? Okay, now just be very watchful. I'm reading the right-hand side of the screen. It is the 1st of July. You are a manager in Beth and Company, a firm of chartered certified accountant responsible for the audit for the year ended 31st of March, right? So 31st March is the year end, and it is the 1st of July. It is the 1st of July 20x5. Look at the dates. It is a reporting and completion question. The year end is 31st March. We are standing after the year end. It is the 1st of July. So are we at the completion and reporting stage? Are we ahead of the year end? April, May, June. So we are standing on the 1st of July. So are we standing at the stage of completion and reporting after the year end? So please watch the dates very carefully in AAA paper. Look at the date where we are. Look at the year end. So are we before the year end or are we after the year end? Tell me. Why are we after? Why are we after the year end? Because it's a question set at a completion and reporting stage. The following exhibits available on the left hand side of the screen. So the exhibits available on the left hand side of the screen provides information relevant to the question, right? So there are 2 exhibits given on the left hand side of the screen. One is an audit completion review and one is an update on the draft audit report. Can you see the 2 exhibits? One exhibit is on the completion stage of the audit completion review, and one exhibit is on the auditor report. So is it just a reporting question? No, it is a completion and reporting question. So one exhibit is looking at the completion aspects of the audit, and one exhibit is looking at the report aspect. Now you have two requirements. You have a requirement A for 20 marks, and you have a requirement B for 5 marks, and you have a response option, word processor. Now requirement A for 20 marks is a completion requirement. Requirement A is from the exhibit number 1, and requirement B is from the exhibit 2. Now, whenever you look at a question 2 and question 3, it's so simple, because when you have two exhibits and when you have two requirements, it's very sure that one exhibit has one requirement, the second exhibit has a second requirement. So look at the first requirement, on your screen. The first requirement is right here. See this, the first requirement. Using the information in exhibit 1. So is the examiner saying that the requirement A is for exhibit 1? Is that very sure now? Using the information in exhibit 1, not exhibit 2, right? Comment on the matters to be considered and explain the evidence you should expect to find in the review of the working papers. So using the information in exhibit 1, comment on the matters. Now, was I clear on this requirement of a question yesterday on day 2? That this is a very, very important question which comes at the stage of completion and reporting. Using the information in exhibit 1, comment on the meta. Did I explain to you this yesterday, everyone? You cannot say no if you were in the live webinar. Comment on the matters to be considered, and can you look at this word and, because students don't look at the word and in the exam paper. I don't know what happens to them. Is there a break? And so comment on the matter and explain the evidence you would expect to find during your review of the working paper. Two requirements. So this question is asking us two things. Number one, we need to comment on the matters. Number two, we need to explain the evidence you should expect to find in your file review. So two things, right? Now, how many issues we have? Expect to find. Okay, comment on the meta. Each matter commented is 1 mark, and each evidence is 1 mark. Each evidence written is 1 mark. So such a simple marking scheme, right? Now let's see how many issues we have in this paper on which we need to comment on the matters and explain the evidence. Is it a reporting question? No, this is a completion question. So this is set at the completion stage, and this is most favorite examiner question at a completion stage. So this is a favorite examiner question on completion stage, asking you comment on the matters and explain the evidence. And you go back and you see how many issues we have to comment on the matters and explain the evidence. How many issues we have? Can you see the screen? The first issue we have is the railway operating license and going concern, purchase customer list, and chairman statement. Control C, and you come back to the word processor. We have 3 issues. Issues in the case study. 3. So for every issue, we will read the case study, we will comment on the matters, and we'll see explain the evidence. Obviously, I will not be doing all the 3 with you in the live class, but I will be starting and you will be ending. So we'll start and you end, because we still need to do another question from September, December 20 paper. So that's the first one, right? The requirement. So we'll pick up the railway operating license and going concern, 7 marks. And in 7 marks, we need to comment on the matters and explain the evidence. Then we pick up the 8 marks purchase customer list, comment on the matters and explain the evidence. Then you pick up the chairman statement, comment on the matters and explain the evidence. And I'll show you the way to write the answer. Is everyone clear with the first requirement? Before I drill and tell you what comment on matters exactly mean, and before I tell you what exactly evidence mean. So 2 terminologies to address. And I think I did touch upon comment on the matters yesterday, right? Okay, now come to the second requirement. Back to the practice platform. Can you see the second requirement on your screen for 5 marks? Just 5 marks. With reference to Exhibit 2. Now, is this requirement in relation to Exhibit 2? So should we be looking at the Exhibit 1 now? No. With reference to Exhibit 2 and assuming that no further adjustments will be made to the financial statement. No further adjustments will be made to the financial statement in relation to the railway operating license or to the chairman statement. Evaluate the appropriateness of the draft audit report produced by the supervisor. So has the report already produced and you need to evaluate whether the report is right or wrong? 5 marks. Now see how you read a question and how I read a question. This is a question set at the stage of report just for 5 marks. And the question on report is this. So just a 5 marks reporting requirement and a 20 marks completion requirement. So which is heavyweight here? The heavyweight here is completion. Now understand, look at this. With reference to Exhibit 2 and assuming that no further adjustment will be made to the financial statement in relation to the railway operating license or the chairman's statement. Assuming no further adjustment will be made. No further adjustment will be made. By whom? By the management. So does that mean the management is reluctant making adjustments? When you read the case, it could be possible that the auditor is asking for adjustments and no further adjustment will be made to the financial statement. By whom? By the management? Agree? Assuming that no further adjustment will be made to the financial statement in relation to the railway operating license, number 1, and in relation to the chairman statement, number 2, evaluate the appropriateness of the draft auditor report produced by the supervisor. Evaluate the appropriateness of the draft audit report produced. So report has already been produced, right? You need to see, is it right, is it wrong? So is it about critically appraising the report produced by the supervisor? Is it right or wrong? And we have 5 marks. And every appropriateness will give us 1 mark. So assuming no further adjustments in number 1, railway operating license, that's 1 issue. Railway operating license, that's 1 issue. And assuming no further adjustment in the chairman statement, that's the 2nd issue. Evaluate the appropriateness of the report produced. So each appropriateness you are evaluating, each comment on the appropriateness will fetch you 1 mark. So there might be something right in the audit report produced, or there might be something wrong in the audit report produced. So you need to comment on the appropriateness, and each comment will fetch you 1 mark. Now tell me if you're a clever student before the break. No further adjustments will be made to the financial statement in relation to railway operating license or the chairman statement. Does that mean we had 3 issues above? We had an issue of railway operating license where the examiner is saying assuming no adjustment is made. So is the management disagreeing with the auditor in the first issue? Yes or no? Okay. Assuming no further adjustment is made in the chairman statement, does that mean that the management is disagreeing with the auditor on the chairman statement? Does that mean the management is disagreeing with the auditor on the chairman statement? Yes. Okay. What about purchased customer list? Examiner is not telling us something about the purchased customer list. So does that mean that the management has agreed with the auditor on the purchased customer list? Because on 2 areas, the management has disagreed with you. No further adjustment will be made in the 2 areas. But what about the 3rd area? Has the management agreed with you on the 3rd area? Is that sure? Right? So please be clever when you read the case. If the examiner is saying that the management is not making adjustments in the 2 areas, what about the 3rd one? This is very realistic that it's very obvious that in the 3rd area, the management must have agreed to the auditor. So there are two areas, the railway operating license, where the management disagree with the auditor in red, and the chairman statement where the management disagree with the auditor red. But there is a purchase customer list where the management agreed with the auditor, or the auditor agreed with the management. At least both are on the same page. Do you agree with me? On the purchase customer list, the auditor and the management is on the same page, right? No, who is asking that going concern question? Railway operating license and going concern is one issue, right? Examiners using the short form, railway operating license. Railway operating license and going concern is one accumulative issue, right? So don't get distracted that railway operating license and going concern are two different issues. That's one complete statement, railway operating license and going concern, right? Is that clear? So try to understand the question first before you answer it. And a lot of time the student don't. See how much time you need to spend in reading and planning the question. Then you understand it. Then you understand what is to be done. In the exam pressure, reading a question this way for a student is so difficult because you are not bothered about reading it even at home. If you make a habit of reading a question at home, that habit will go to the actual exam paper. And if you read the question well, the chances of writing a wrong answer gets eliminated. But if you don't read a question well, then the chances of writing a wrong answer increases. Right? Is that clear to all of you? So is the question clear? One stage of the question is completion, which we will be solving right after the break. And one step of this is report, which again we will be solving right after the break. Now, what I want from you during the break is that during the course of the break, look at this practice platform. And on the practice platform, we have this question number 3. So if you can just start to read the exhibit 1, which is audit completion review. This one. At least read the first issue, railway operating license and going concern, and read the second issue, purchase customer list and the chairman statement. Read all three of them, right? And read the second exhibit, which is about the draft audit report. That will save a lot of time when I start to answer the question March June 21, question number 3. So after we complete this question today, that means at least in this webinar, I have touched upon every recent question. I touched upon the question number 1 on the first day, day 1 and day 2. I touched upon the question 2 on the day 2 and day 3 today, and I'm touching upon the question 3 on the day 3 today. And if something left incomplete, I will be touching upon the same on day 4 tomorrow. So that means after this webinar, at least the latest paper has gone into the webinar, right? So that means the December 20 paper was touched upon more in the last webinar. So if you watch my last webinar, the June 21, I was more focused on December 20. So that means you get a very rigorous practice of the recent paper. So you cannot say the latest paper was very difficult. So I hope you can control the latest paper after the webinar ends. Is that clear to all of you? Numan, I've already covered reporting to those charged with governance in my previous webinar. So again and again, I'm saying watch my previous webinar. Do you expect everything to be covered in 3 hours or 15 hours of this free webinar? So you need to appreciate the fact that ACCA is organizing a resource for you for which ACCA is not even charging you. And in this 15 hours, ACCA is giving you an idea and ACCA is giving you a direction where you can go and watch the library which ACCA has maintained for you. And if you carefully use the library ACCA has given to you and you don't want to incur any cost on your education, you can still pass the AAA paper. You just need to pay the exam fees and you can use the free resources. And there are so many students who are just using the free resources of ACCA, these webinars, and just incurring the exam entry cost and passing the ACC qualification, right? Are you clear, everyone? And Molly, I don't understand your question. If you can just raise your question back again. Right. So I think you should appreciate the webinars. You should appreciate these libraries maintained by ACCA free of cost for all of you and benefiting thousands of students in different parts of the world. Okay, it's time for a break now. I hope you liked the first part of the session. And it's like 5 minutes short of 10 in Pakistan. So it's like 9:55 p.m. in Pakistan. So let's resume after a 15 minutes break at 10:10 p.m. Right? So 10:10 p.m. Pakistan Standard Time, we have a break. Let me put that in the chat box. Break till 10:10 p.m. 10:10 p.m. Pakistan time. So please take a break, come back at 10:10. We'll start with the last stage of day 3. Okay, we're off to a break, right? I'll start to speak with you at 10:10 p.m. Okay, welcome back, everyone, after the break. I hope you can all hear me. We're just like a minute away from the scheduled end of the break time, but I just want a confirmation that all of you can hear me. Okay, thank you so much for confirming that. So we are just like a minute away from the scheduled end of the break time. So in courtesy, I have to wait till that time. And we need to start drilling the question number 3 from the latest exams, the March-June 21, right in front of your screen. Okay, then that is it. Let's resume back. Welcome back to the day 3 again. We were discussing the question number 3. We were doing the analysis of the question number 3 right before the break. So let's start the journey, reading, drilling, and understanding the question 3 of the very latest exam sitting the March-June 21. And let's see how to write a very good answer for the question number 3. Now, when you look at this question in front of your screen, you read the right hand side of the screen, so there is nothing much important on the right hand side of the screen. We just coming to know that it's the 1st of July and we know the year end is 31st of March, so we are after the year end, so that means we are at the completion stage of the audit. And then on the left hand side of the screen, we got to know the two exhibits. The first is a completion review exhibit, and then is the draft audit report. Let's first start with the completion and review exhibit, where the requirement is comment on the matter and explain the evidence. Now, let's take on the word file quickly. Now, when a question asks you comment on the matter and explain the evidence, which is just over here, if I can just copy that down and we take it on the fresh page here and start the analysis. Now, when the question asks you comment on the matter and explain the evidence, I was telling you yesterday in the day 2 session, rather the examiner was telling you that in the article, and I just reinforce that the comment on the matter is the same way you write a ROM answer using the 4-step model, using the four steps, right? And you all know the 4 steps, right? The first step was materiality, then it was the accounting treatment, then it was the risk and impact, right? So examiner was saying, in the same way you write a ROM answer, you will be writing the comment on the matter answer in the case the question comes on evidence. I hope you're all clear on that, right? Okay, now what to do? In the same way you write a ROM answer using the 4-step model. Now that means you will have materiality as a matter, you will have accounting treatment as a matter, you will have risk as a matter, and the impact on financial statement as a matter, because they were basically the 4 steps. Now, my concern factor is that a lot of time the student only thinks about the 4 steps when they are commenting on a matter. You need to understand that there might be a matter which is an accounting matter, right? If it is an accounting matter, then in the case of an accounting matter, the 4 steps are very valid: materiality, accounting treatment, risk, and the impact on the financial statement. But what if when the examiner is asking you comment on the matter and there is something like a non-accounting matter, just like a chairman statement? Now, a chairman statement is not an accounting matter. A chairman statement is another information in the annual report. I hope you all agree with me. So the chairman statement doesn't seems like an accounting matter. Railway operating license and a going concern is an accounting matter. Purchase customer list seems like an intangible asset, is an accounting matter. But chairman statement is another information. So is chairman statement a non-accounting matter? So can we have a materiality of the chairman statement? Can we have an accounting treatment of the chairman statement? No. So that means comment on the matter is the same. You write a wrong answer. That's perfectly fine. But if in comment on the matter, you get a non-accounting matter, then in the case of the non-accounting matter, the comment on the matters will be case specific. That means you need to read the case of the chairman statement, and from the chairman statement you need to find what matters will you comment on. So not necessarily every time comment on the matter is the 4-step model. In a certain case, the comment on the matter will be a case exercise, that from the case you read the case and you understand what matters to comment on. And that means in the session today, you will get to know that comment on the matter is not just materiality, accounting treatment, risk, and impact. It can be more than that. Is that clear to all of you? But every time you comment on a matter in an evidence question, you get 1 mark per comment, right? Okay, thank you. Let's start the journey and then explain the evidence. Now, in my webinar today, I'll not be telling you the rules of evidence because I've told you the rules of evidence in my previous webinar. So don't expect the rules of evidence I will be teaching you. If you want to know the rules of evidence, then watch the previous webinar. I'll just be putting the answer. I'll not be putting the answer of explain the evidence you should expect to find in the file, because the rules of evidence, watch the previous webinar and formulate the answer. Formulate the answer for evidence yourself by watching the previous webinar. So I'll not be writing the part of evidence for you because I've done evidence so many times in the previous webinar that I don't want to repeat that. Comment on the matter, I'm doing it because I want to guide you about the 4-step model and what will you do for a chairman statement, right? Is that clear to all of you? So will you be able to do the evidence yourself by watching the previous webinars? Will you be writing the evidence yourself? Okay, that's good. Thank you. Okay, let's go down first with the railway operating license. 7 marks. Comment on the matters. Okay, let's take on the practice platform. Audit completion and review. So in audit completion and review, we have the first paragraph here, which is about this. I'm just copying the information from here, and just give me 1 minute. If I can take this to my Word file, because that will give me a large space to read things with you. Just give me 1 minute. Sorry, again, if I can just paste information here. Okay, can you see this on your Word file in front? I've just copied that from the practice platform onto my Word file, so I get some space to do a proper analysis with you, right? So I just copied from the practice platform. You can see over here, I opened up the exhibit 1, and from the exhibit 1, I copied the information up to the railway operating license and going concern. Now I'm going back to my Word file, so I don't need to switch back and back again. I'm reading from here. Matty, a company, is a listed transport company. That's important information. So highlight listed transport company which provides train and bus services. The audit of METI for the year ending 31st of March is nearly complete and you are reviewing the working paper. So does that tell me we are standing at a completion stage? It's a listed company and the audit is nearly complete and you are reviewing the working papers. METI company is a new audit client of the audit firm, a new audit client. So is that an important information? I might need to use it somewhere when answering the question. It's a listed company, that's important. I might need to use it somewhere. It's a new audit client. I might need to use it somewhere when I'm answering my question. And we are standing at a completion stage of the audit. The previous auditor issued an unmodified opinion on the financial statement. So the previous auditor issued an unmodified opinion. Let's see which opinion will I be issuing, because this time I am performing the audit. METI company's draft financial statement recognize revenue of 60.1 million. I can use the figure of revenue for finding the materiality if needed. Comment on the materiality. The profit before tax of 10.5 million. So that can be used for finding the materialities wherever possible, and the total assets of 28.4 million. So see how I read the case with you? I just highlighted important information. Now, by the end of the first paragraph, I know it is a listed company. I know we are standing at the completion stage. This is the new audit client, and we know the profit, revenue, and the total asset value for finding the materiality. The audit supervisor has brought the following matters for your attention. You are a manager, right? Let's see what matters have been brought for your attention. The first matter is railway operating license and going concern. Let's see what's the issue. Comment on the matters. So let's prepare our answer. Comment on the matters. We have total of 7 marks, I think, if I'm not mistaken. Let me confirm the number of marks. 7. And in the 7, we are not just commenting on the matters, we need to write the evidence as well, right? So let's start the journey first with the first meta, railway operating license. METI company has operated a national railway service for the last 19 years. Okay. METI company's national railway operations have been subject to adverse publicity in the last 12 months. Subject to adverse publicity in the last 12 months. Is that a strange event for the business? That they're running a rail service for the last 19 years, but they have been subjected to adverse publicity in the last 12 months. So can an adverse publicity brings a doubt on your going concern? Can it affect your reputation? Can it affect your goodwill as a company? So adverse publicity over the last 12 months in relation to unreliability of its services, including the late running of the train. So there has been some adverse publicity in the last 12 months in relation to some unreliability of the services, including the late running of the train. So that's becoming my first issue. Let me copy that first issue before I see how to comment on this. Let's write it here. Brainstorming. And in the brainstorming, this becomes my first issue, adverse publicity. Now, as a result of the adverse publicity, because in relation to some unreliability of the services, including the late running of trains, if you go down this paragraph, can you see that the National Railway generated 40.2 million of revenue in 20x5? Last year, it was 47.2 million. Has their revenue gone down because of this adverse publicity? Can you find out how much is the decline in the revenue gone down in the last 12 months because of adverse publicity? Can anyone find the percentage of revenue going down over here? See this? Last year it was 47.2 million. This year it's 40.2 million. Okay, the revenue has gone down by 14.83%. Okay, so does that mean the adverse publicity is taking a negative impact on the financial numbers? Right? Okay, and how much has the profit gone down? The pre-tax profit this year is 11.2. The last year, the pre-tax profit was 13.3. So how much has been the decline in the profit because of this adverse publicity? The profit gone down by 15.7%. Now, is that an important information that there has been an adverse publicity? And can you see the adverse publicity is already resulting in the revenue going down and the profit going down? Right? Okay, see how I'm using the information. Okay, let's go back. Okay, revenue is down by 17.4. Which percentage is right? 14.83 or 17.4? Revenue gone down. Because one student is saying the revenue gone down is 17.4. It's 14.83. Okay, that's the majority of the answer. Perfectly fine. Thank you. Okay. The license to operate, I'm reading the third line. The license to operate the National Railway is put out to tender by the national government every 5 years. So every 5 years, the government put the tender for operating the National Railway. So the license to operate the National Railway is put out to tender by the national government every 5 years. METI company's existing license is due for renewal on the 28th of Feb 20x6. So your license is due for renewal on 28th of Feb 20x6. That's the foreseeable future, right? The year end of the company was what? The year end of the company was 31st of March. So the license is due for renewal on the 28th of Feb 20x6. So is that in the definition of a foreseeable future? Is that the definition of a foreseeable future? 12 months after the balance sheet date? Going concern, right? So when the auditor is evaluating the going concern, is the auditor evaluating the 12 months after the balance sheet date? Okay, so the license is due for renewal on the 28th of Feb. So let's write this next point. Existing license is due for renewal on 28th of Feb. Control C, Control V. The current tendering process is approaching completion for the license, and despite the recent operational problems, METI was informed on the 30th of June that the company was the government preferred option. So is the government still preferring METI for this license? On the 30th of June, that the company was the government's preferred option. So is there a high chances you might get this license even despite the adverse publicity, so far so forth, everyone? Okay, this was on the understanding that the company would address the recent criticism of the poor service level. So if the company is able to address the criticism, the government will give you the license. Full stop. The company was also informed that the tender would still be subject to a detailed review in 1 month time prior to being awarded. So is there an issue coming here? The company was informed that the tender will still be subjected to a detailed review in 1 month time. So will the government review METI in 1 month time, then decide whether to give them the license or not? So the company was informed that the tender will be subjected to a detailed review in 1 month time. So does that means in 1 month time, the government will review your performance? Have you taken some actions to improve your service level? And if the government fails to identify that the service levels have improved, will the government reward you the license? Probably no, right? So the government will review the performance of the company in 1 month time to assure whether the license should be given to them or not. So that is the case study. We've read the case. So do you understand from the case that there are certain issues facing the going concern status of the company? The revenue has gone down, the profit has gone down, there has been an adverse publicity. The government will review things in 1 month time and then decide whether to give them a license or not. What if they don't get the license? Will that really impact the going concern status of the company? Because METI is a listed transport company which provides train and bus service. So will that be really affected? If they don't get the train license, they might have a bus license, right? Right. So brainstorming done. Now tell me, the National Railway generated 40.2 million of revenue. The National Railway generated 40.2 million of revenue. What is the total revenue of the company? Look at the first paragraph. The total revenue of the company is 60.1 million. So how significant is the revenue you are getting from the train service? Your total revenue as METI is 60.1 million in the first paragraph. And the revenue you are getting from the train operation is 40.2 million. So how significant is the operation? How significant is the train operation? How significant is the train operation to METI? To METI. Okay, one student is saying to METI. So we should divide 40.2 million. 40.2 million, that is the revenue from the train, with the total revenue from the business 60.1 million. 60.1 million. So how significant it is? Almost like 67% of the total revenue. Okay, next, plus profit. How much is the profit we're coming from the train operation? The profit coming from the train operation is 11.2 million. And the total profit of the company is okay, sorry, that's the pre-tax profit. Sorry, that's the pre-tax profit, and we have the post-tax profit. So we cannot compare it. Leave it out. Leave it out. So that's quite a significant part of the revenue. Ends the story. Now we need to comment on the matters. How will we comment on the matters? Will we find materiality, accounting treatments? No, because it's a going concern matter. So the first comment on the matter we will tell is that as per the relevant financial reporting standards, management of METI should disclose material uncertainties in relation to going concern of the train operations in the notes to the financial statement. I hope you all agree IS 1. I'm not naming IS 1 here, but that is the requirement of IAS 1, presentation of the financial statement, that you should disclose the material uncertainties relating to going concern in your notes to the financial statement. So is that the accounting treatment of IS 1? That as per the relevant financial reporting standard, the management of METI should disclose material uncertainties in relation to the going concern of the train operation in the notes to the financial statement. So did we wrote the accounting treatment? Okay, then you tell the train operation is material to METI as it contributes 66% or 67% to of the total revenue of the company. So have we mentioned the materiality, that the train operation is material to METI as it contributes 67% of the total revenue of the company? Full stop. Have we commented on the materiality of the train operation to the company? And have we wrote the accounting treatment that as per the IS 1 or as per the relevant standard, they should give disclosures of the material certainties? Full stop, and you speak after. The train operations is facing numerous uncertainties with regards to its foreseeable future. The train operation is facing uncertainties with regards to its foreseeable future, as already due to adverse publicity. The revenue has gone down by 14.83%, and the pre-tax profit has gone down by 15.7%. The train operation is facing uncertainties with regards to its foreseeable future, as already due to adverse publicity, the revenue has gone down by 14.83% and the pre-tax profit has gone down by 15.7%, and the government will be performing a review in 1 month time to decide whether the license will be rewarded to METI or not. So you're telling examiner that these are the uncertainties in the question. They are facing an adverse publicity, revenue has gone down, profit has gone down, and in 1 month time, the government will be performing a review to decide whether the license will be given to METI or not. Now, these are all the uncertainties which needs to be disclosed in the notes to the financial statement because it is a listed company. So all these uncertainties should be disclosed in the notes, for the attention of the shareholder, being a listed company. So see, have we commented on the matters? The first matter we commented on was the accounting treatment, that as per the IS 1 we require a disclosure. We then commented on the significance of the business materiality, and we then commented on that there are so many uncertainties. So we commented on the matter being the uncertainties. Now that was a case specific matter, right? The paragraph 3 is a case specific matter. Then fourth, if no disclosure is given, the financial statements of METI will be materially misstated. We are solving the part 1, right? In the part 2, examiner is saying the management is not adjusting anything, but we are solving the part 1 in isolation of the part 2. So if no disclosure is given, the financial statement of METI will be materially misstated because it's a going concern disclosure. We talked about the risk and the impact for 1 mark. Now see, we got 4 marks from comment on the matters. Is everyone clear on this? Have we wrote something out of the case study? We found materiality, we found a treatment, we found something specific to the case, the indicators of going concern. Did I mention the indicators of a going concern as a very specific matter? Paragraph number 3. Right? Right. You want to write this in a single paragraph, you can write it in single paragraph. You want to write it in 4 paragraphs like the one I wrote, you can write it in 4 paragraphs. That doesn't make any difference at all. Is everyone clear with the understanding? That's the bottom line. So the matter can be materiality, treatment, risk, impact, but there could be a specific matter in the case study, which only you will get to know when you're writing a case study. Right? Right. The financial statement should be prepared on a breakup basis, Sakina. That's too harsh ruling. The company is just facing some material uncertainties, and that should be disclosed in the notes to the financial statement. Breakup basis is the last resort. Breakup basis comes at the time when the company is liquidating. METI company is not liquidating, right? METI company is not just running a train service, they're also running a bus service. The business is not coming to an end. So a lot of time the student takes a very harsh ruling in the exam paper that the company is closing down and the financial should be prepared on a breakup basis. That's not the case. You should just keep yourself to a material uncertainty in the exam paper, and you just keep yourself down to disclosure in the financial statement. That is it. Never think about a breakup basis. Okay. Now, after this, you have to write evidence in working paper file. Will you be able to write evidence in the working paper file? How many marks are we left with? Total marks were 8, so we got 4. So that means you need to write 3 evidences. 3 evidences in the file. We got 4 marks, right? Almost. From the drafting above. Right. Let's look at the next issue. The next one. The chairman's statement, because that's where we need to think realistically. The next issue, the issue I'm skipping is the purchase customer list, because that's ICE 38 and you can easily apply the ROM knowledge. Purchase customer list is very simple, MTRI. So it's an ICE 38, it's an intangible asset, so you can easily apply the knowledge of ROM there. So you can easily do the purchase customer list, right, everyone? Is that clear? Purchase customer list is the application of ICE 38, so you can easily apply the approach of the ROM you understood yesterday. Let's look at the chairman statement, and let's look at the matters you need to comment on the chairman statement. I'm copying the chairman statement from here. How many marks we have for chairman statement? In the exam, we have almost like 5 marks for the chairman statement. Okay, let's copy the chairman statement here. The next point, under the line. Okay, I'm copying the chairman statement here. Can you all see the chairman statement on your screen now on the Word file? Let's do the brainstorming and let's find the comment on the meta. Brainstorming and let's do comment on the matters. Why am I doing the chairman statement? Because it's a non-accounting matter. So you might struggle writing the matters at home. But for the purchase customer list, you can easily write the matters, right? So let's go down to the chairman statement and let's see what sort of issues we have in the chairman statement. Okay. METI company's draft annual report includes a performance review written by the company's chairman, from which the following extracts have been taken. So a chairman review as part of the annual report, that is something very fine. But let's see, is there something wrong in the chairman statement which has been published? The chairman opens the inverted comma. It is always a pleasure for me to be assisted with such a stable and a high performing company as METI. Look at this first statement. It is such a pleasure for me to be associated with such a stable and a high performing company as METI. That's the first statement, which is very contradictory. It's a very contradictory statement because we've already seen the revenue going down and the profit going down of the train business, right? But even if you look at the revenue, the overall revenue of the company, has fallen down from 94.3 million to 60.1 million. The profit of the company has fallen down from 22.1 million to 10.5 million. So is it like a very stable business? If you look at the opening paragraph, is the statement of the chairman contradictory? Is he trying to conceal something from the shareholders? It is always a pleasure for me to be associated with such a stable, high-performing company. Look at the situation. I'm copying from the para 1. In the para 1, sorry, just give me 1 minute. In the para 1, we come to know that the revenue of the company has gone down and the profit of the company has gone down. Find the percentages for me quickly. Let me paste here. The revenue was 94.3 million. This year it's 60.1 million. The profit was 10.5 million. Last year it was 22.5 million. So how much is the down in the revenue? The revenue is down by how much? Almost like 36%, rounding off. Okay. And profit before tax is down by how much from the last year for the whole company? Almost 45%. So revenue down, profit down, and the chairman is saying, it has always been a pleasure to be associated with such a stable and a high performing company. Is that a contradictory statement when you look at the performance above? Is that something contradictory to above results? So is there a material inconsistency between the chairman's statement and the actual results under the ISA 720? I hope you know the rule of the material inconsistency, right? Okay, let's go back above. During my tenure as a chairman, over the last 5 years, the company's business has grown each year and has produced an ever improving return for investor. The company business has grown each year and has produced ever improving returns to investor. Is that a contradictory statement again? It is. Sorry, just let me copy this statement. The company business has grown each year and has produced excellent results for investor. Has it grown this year? Has it grown this year? The company business has grown each year. Has it grown this year? So is that like a contradictory statement? And has produced an improving returns to investor. Profit has gone down by 45%. Profit has gone down by 45%, and the chairman is saying improving return for an investor. Right? The chairman is doing exactly the same thing you do in the exam paper, that you read something and you write something. During my tenure as a chairman, the company's business has grown each year and has produced ever improving results for investor. This is exactly the way the student writes an answer in exam paper. Full stop. The audit working paper include notes of a discussion with the company's finance director, in which he commends the chairman performance review and maintain that everyone understand that this is the chairman role to promote the company with a positive narrative. So see what is the finance director saying? He commends the chairman performance review and maintains that everyone understand that it is the chairman role to promote the companies with a positive narrative. With a positive narrative or with a contradictory narrative? Is the chairman is the finance director view right here? The finance director statement right? Is he putting a positive narrative or is he putting a contradictory narrative? So is the reply of a finance director interesting? Is the reply of a finance director interesting that the chairman role is to promote the company with a positive narrative, whether he's telling a lie? So you cannot promote a positive narrative by telling a lie to your shareholders. The chairman is telling a lie. So now let's comment on the matters. Now, when you start to comment on the matters, knowing the fact that there have been some contradictory statements, is there any materiality accounting treatments? No, right? We just go down commenting on the matters of the situation given to us. So first of all, we tell us the auditor has a duty to read and review the other information in the document containing the financial statements. The auditor has a duty to read and review the other information in the document containing the financial statements to determine whether there are any material inconsistencies with the within other information or not. So you started with not the accounting standard, you started with an auditing standard because you were commenting on the chairman's statement, which is part of the ISA 720. So you said the auditor has a duty to read and review the other information in the document containing the financial statement to determine whether there are any material inconsistency within other information or not. In this case, the review of the chairman's statement has identified several material inconsistencies where the chairman statement is contradictory to the financial results of METI. Right, so you first started with the journal responsibility of the auditor by telling the auditing standard. You got 1 mark for that. Then you tell, in this case, the review of the chairman's statement has identified several material inconsistency where the chairman's statement is contradictory to the financial results of METI. In this case, the review of the chairman's statement has identified several material inconsistencies where the chairman's statement is contradictory to the financial results of METI, full stop. Firstly, the chairman mentioned that high performing company, stable and a high performing company. First of all, the chairman mentioned that METI is a high performing and a stable company, which contradicts the actual financial results where revenue has fallen by a fill in the blank percentage. Revenue has fallen by a fill in the blank percentage and profit has gone down by a fill in the blank percentage, full stop. You get another 1 mark. Secondly, the chairman mentioned that in last 5 years, since he is serving as a chairman, results have been, just let me copy that statement, has produced ever improving returns, grown each year, and good results to shareholder. Since he's serving as a chairman, results have been growing and better returns to shareholders have, and improving results have been growing and improving returns to shareholders, which is contradictory as the results are falling as mentioned above. Full stop. So see, you are telling that my duty as an auditor is to review the other information, 1 mark. In this case, the review has identified several inconsistencies. The second mark, comment on the matter. Then you say, firstly, the chairman's statement is wrong. You get another 1 mark, and you put the references of the numbers, quote the numbers. Then you put, secondly, the chairman's statement is wrong, and you get your second mark. Then you put the statement of the finance director, that the stance of the finance director is wrong, as the role of the chairman is to portray the true and fair position of the company, not a positive stance by telling misleading information to shareholder. See, you criticize, 1 mark, comment on the matter. Now see, over here we commented on the matter by taking the information from the case study. We didn't had the approach of materiality, treatment, risk and impact, right? So are you finding this 1 mark every paragraph? So we had a 5 mark situation. We almost took 5 marks from the comment on matters. Even if you comment less, you need to write evidence after. So I've given you maximum 5 marks on comment on the matters, but you need to write evidence as well. So you can even comment less than 5 above, and then you put the heading evidence in working paper file, and you write couple of evidences, working paper file. So if you can just write like 3 matters or 4 matters, and you can write 1 evidence in the working paper file, that's even fine. But never write a 0 evidence in working paper file. So you can reduce the number of matters above and make space for evidence in working paper file. Is that clear to all of you? So are you understanding the way to write comment on the matters? You need to be within the case study. You need to involve yourself within the case study and go down with it. Right? Now, look at the second part of the question. The second part of the question is very, very interesting, because in the second part of the question, the examiner was asking us, I think the second part of the question has gone down because I've copied the requirements here. Just give me 1 minute to fetch out the second part of the question. Okay, the second part of the question was this. Let me copy this down. We need to do that. Have everyone understood the issue 1 and issue 3? And will you be going with issue 2 back at home? The purchase customer list? Is everyone clear? Okay, that's great. Okay, now look at the second part. With reference to Exhibit 2, assuming no further adjustment will be made to the financial statement in relation to the operating license, that means, will the management be giving a disclosure of the going concern problems? Assuming no further adjustment will be made to the financial statement in relation to the operating license or the chairman's statement. So will the management be rectifying the chairman's statement? Will the management be rectifying the chairman's statement, assuming no adjustment is made to the chairman's statement and to the railway operating license? So does that mean management is reluctant to give a disclosure of the going concern problem? And does that mean that the management is reluctant to rectify the chairman's statement? Right? Everyone, evaluate the appropriateness of the report. Evaluate the appropriateness of the report. Now, I will ask you first what you think, and then we'll see the report is right or wrong. Let's see whether you are clever enough to take the right perspective. Okay, let me take you back to the second exhibit. I'll open the second exhibit. Over here is the second exhibit on the case. Okay, let's see what is the second exhibit here. Let me copy the second exhibit from here. Control C. I'm taking the second exhibit on my Word file. Exhibit 2, and I'm copying the Exhibit 2 here, right? Let's read the Exhibit 2. Okay. It is now the 22nd of July, and all matters in relation to the purchase customer list have been satisfactorily resolved. So the matters relating to the purchase customer list have been satisfactorily resolved. Is that clear? So is the management in agreement with the auditor on the purchase customer list? Yes. But are they in agreement with the auditor on the railway license and on the chairman statement? Everyone? No. So it is the 22nd of July. We are about to sign the report, and all the matters in relation to the purchase customer list have now been satisfactorily resolved. Following the submission of a customer petition to the government complaining about the company's poor service level, on the 19th of July 20x5, that is before the signing of the audit report, the government released a statement announcing that it had withdrawn Petty Company's preferred bidder status and was reopening the tender process for the National Railway license. So see, uh, is that damaging the going concern status of the company now? Because the government has took a decision on the 19th of July. We are standing on the 22nd of July, and we are about to sign the audit report. And before the audit report on the 19th of July, the government has released a statement announcing that they are opening the bidding process, and no more, METI is no more a preferred bidder. So is that escalating the going concern problem? Is that escalating the material uncertainty? No, the company will still not liquidate, Hamza, but the material uncertainties will become more evident. Not 100% of the revenue is coming from train business, right? Not 100% of the revenue is coming from the train business. So we're not saying the company is closing down, but the material uncertainties are escalating. Okay, the company's finance director has provided details of a short disclosure note he plans to include in the financial statement, which refers to the uncertainty in relation to the current status of the tender and possible going concern issues which might arise as a result. So is the finance director putting a short disclosure in the notes to the financial statement about the going concern problem? Look at this word here, short. It's not a complete disclosure. It's a short disclosure. What does IAS1 require? IAS1 requires a complete disclosure, adequate disclosure. Do you mean in a short, does it mean that in a short disclosure, something will be omitted? You will not be telling everything to the shareholder. So are we giving a disclosure? Are we not giving a disclosure? Tell me. We are giving a disclosure, right? But is it a short disclosure or is it an adequate disclosure? So will the auditor like the short disclosure? Will the auditor agree with a short disclosure? No. So the finance director has agreed to give a short disclosure of the material uncertainties, full stop. The disclosure note concludes with the statement that the management of METI company is very confident that the company will be successful in the tender process and that it will retain the national license for at least the next 5 years. So the company is still optimistic that uh, in the tender process we will still win it. Has the company been put out of the tender process, or will they be participating in the tender process? They are no more a preferred bidder, but are they still part of the tender process? So the company is taking a very subjective stance that they're still confident that they will win the license for next 5 years. Probably this seems like a very subjective judgment, and probably believe like they're fabricating the mindset of the shareholder. They're still telling the shareholder, don't worry about, we will still get the license. So it is a material uncertainty, right? On one side, they've lost the preferred bidder status. And on the second side, the company is still confident they will win the license. They might. We're not saying they're totally wrong. They might. But there is a material uncertainty, right, which should be disclosed in the notes to the financial statement. But the problem over here is they're giving a short disclosure. That's one problem, right? Number two, The draft audit report includes an unmodified opinion. The draft audit report includes an unmodified audit opinion and the key audit matter section and a key audit matter section which refers to the disclosure note described above and related uncertainties in the going concern status. What have we done in the report? Tell me, is the report right here? Honestly, firstly, there was a short disclosure. There was a short disclosure given in the notes, which means that the disclosure is inadequate. So if the disclosure is inadequate, there is a disagreement between the auditor and the management. Will the auditor agree to the short disclosure? Will the auditor agree to the inadequate disclosure? So the short disclosure given in the note, which means that the disclosure is inadequate, and definitely that will mean that there is a disagreement between the auditor and the management. So if there is a disagreement between the auditor and the management, will that result in a modified report due to issuance of either a qualified opinion because there is a disagreement, or an adverse opinion? If the note to the financial statement would have been adequate, then you would have given a paragraph, material uncertainty relating to going concern. But over here, the disclosure is not adequate. How can you give a paragraph relating to MURGC, right? So do you all agree that a short disclosure is inadequate? Number one, tell me. Bullet number one, you're all clear on bullet number one? All of you? Okay. So when you believe this is inadequate, bullet number two, do you all agree with the disagreement between the auditor and the management? Okay. Then in the bullet number three, should we issue a modified report if there is a disagreement? Do you all agree with that? And either we will issue a qualified opinion or we will issue an adverse opinion, depend upon how significant the matter is. Now tell me, do you agree that this matter relates with going concern and this matter relates with material uncertainties relating to going concern, which is something very, very important for the shareholder? Something very important for the shareholder. If they fail to get the license, it can bring a big question mark on the future of this company. So going concern, it is a material uncertainty. It is something very important for METI future survival. So in that case, it is something pervasive. And eventually, the better opinion would be an adverse opinion if the management fails to give a complete disclosure. So if the management is reluctant to give a complete disclosure, this is a very pervasive matter. You need to justify in the exam paper the basis of pervasive. I hope I've justified the basis of pervasive, something very important for METI's future survival and something very important for the shareholder. This is not material, this is material and pervasive, right? So what have we given in the draft audit report? We have included an unmodified opinion in the draft audit report. Is that right? Is that wrong? So you need to comment on the opinion. You need to comment on the report. Is the report right? Is the report wrong? And we have also included a key audit matter section which refers to the disclosure note. Do we refer to the disclosure of a going concern in CAM? Understand. If the going concern disclosure would had been complete and adequate. Just imagine for a minute. If the going concern disclosure would had been complete and adequate, an auditor agreed to it. Then what would have happened? Then the auditor would had added a para in the audit report after the basis of opinion para, known as MURGC. So when you add an MURGC paragraph, you add an MURGC paragraph when the going concern disclosure would had been complete and adequate and the auditor agreed to it. But in our case, it was a short disclosure, it was an incomplete disclosure, and you disagree to it. So you not just you have included the going concern disclosure in a CAM. Can we include a going concern disclosure in CAM? CAM is for matters other than going concern, right? CAM is for matters other than going concern. So in a CAM, the key audit matter, the matter is other than going concern matter. If there is a going concern matter, will it come in CAM or will it come in MURGC? You cannot have an overlapping audit report that you put a matter in a going concern paragraph, you also put a matter in a CAM paragraph. You cannot make an overlapping report. So in a key audit matter paragraph, you can put whatever matter you want to put, whatever the definition of CAM is, but at least a going concern matter never gets to a CAM paragraph. Is that clear to all of you? So key audit matter section in the audit report, is that right? Is that wrong? So that's the first wrong. That's the first wrong, and you have to justify why it's wrong when you tell the examiner. Key audit matter section, which refers to the disclosure note described above. So is this key audit matter paragraph right or wrong in the report? That's the second wrong. You have to justify the examiner. So we have included a key audit matter section in the audit report describing the related uncertainties. If the related uncertainties would have been right, you should not have included a CAM, you should have included in the MURGC. Is that clear to all of you? You need to understand that CAM only comes for significant, CAM only comes for significant areas like risky areas, areas involving estimates or subjectivity, or CAM comes in the financial statements for any significant adjusting or non-adjusting event. So when you look at the definition of CAM, CAM comes in the audit report for significant areas like risky areas, areas involving estimates or subjectivity or adjusting or non-adjusting events. CAM does not come for going concern matter. So when you look at the word CAM, key audit matter, the matter is as follow, but does not include a going concern matter, I hope you're clear on that. So you need to pick up this word matter. Which matter in a CAM? Significant areas like the following. That is the definition of a matter for CAM. So do you agree that the report published by the supervisor is wrong? Number one, for the modified audit opinion, and you have to justify that by telling examiner what should have been the right opinion. Then the key audit matter section. You will tell examiner that the key audit matter section cannot come for going concern, because if the going concern disclosure would have been complete, then you should have inserted a paragraph known as an MURGC paragraph. Is that clear to all of you about the rules and regulations? Okay, now just testing you. The chairman statement, there was a material inconsistency in the chairman statement. Have we done anything in the audit report for that? There was a material inconsistency in the chairman statement. You read that with me today. So what is the impact of this on the audit report? Have we included any impact of this in the audit report above? No. So is the report wrong? The report published above is wrong because the report does not give any reference to other information paragraph highlighting the material inconsistency in the chairman statement. So should you have included another information paragraph in the report highlighting the material inconsistency in the chairman report? Have you done it? Have you done it? So is the report published by the supervisor right or wrong? There is no paragraph, no other information paragraph in the chairman in the report. Okay. What about the last issue? The last issue was the last issue was the purchased customer list. Purchase customer list. Let's see who is a clever student in the last 10 minutes of this webinar today. Purchase customer list. Are you all ready to read the purchase customer list with me? Okay. Let me show you purchase customer list on the practice platform. Okay. Can you all read this purchase customer list on your screen in front? I'm giving you 5 minutes. I hope this is big enough for you to read. Can you read this purchase customer list paragraph just and tell me you are clear with what is happening in the purchase customer list? Just read it. I'm giving you 3 minutes. Okay, if you have all read it, I'm asking you some questions. Give me the answer. Has the management done the right accounting treatment by recognizing the purchase customer list as an intangible asset? Okay, interesting. Some students said no. You're giving a AAA paper on the 6th of September and you have such bad accounting knowledge. The company has done perfectly right to record the purchase customer list as an intangible asset because they purchased it. It is a purchased customer list. So it should be treated as an intangible asset. That's perfectly right. Okay. Is there some subjectivity along with the purchase customer list? That is, you treated it as having an indefinite life. Is that something subjective, treating it as an indefinite life? So is this an estimate of the management that it has an indefinite life rather than a definite life? Okay. The second subjectivity involved in the case is the value in use. They estimate the value in use at 7.2 million. Now, if an intangible asset has an indefinite life, should you review the asset for impairment every year? And if the intangible asset has a finite life, you amortize it. But if the intangible asset has an indefinite life, you review it for impairment. Am I right? So if the life is finite, you amortize it. But if the life is indefinite, you review it for impairment every year. Have they reviewed it for impairment? Yes, they have. And they estimate the value in use to be 7.2 million. So estimate. So are there a number of estimates involved in the scenario? First, about the indefinite life. Second, about the value in use. Is the value in use more than the carrying amount of the asset? The carrying amount of the asset is 6.9 million. So is there a need to recognize the impairment loss? Is there a need to recognize the impairment loss? No, because the value in use is higher than the carrying amount. So there is no need to recognize the impairment. So has the management done everything right? They've recognized it as an intangible asset. They are using it as an indefinite life model and they're carrying out the impairment. Does anything seems wrong here? So when you are writing the answer for matter, you will find the materiality of $6.9 million. You will write the accounting treatment. You will appreciate the accounting treatment. But the only risk is if the management estimate is wrong, the management might be understating the impairment loss. What if the estimate of 7.2 million is wrong? What if the value in use is $6.5 million? Then should we record an impairment loss? So there is a risk, right? There is a risk because there is an estimate. But what is the examiner telling us in the exhibit number 2? In the exhibit number 2, the examiner is telling us, read this very carefully, everyone. In the exhibit number 2, let me bring back to the Word file. On the Word file, what was the examiner telling us here? Read this first line. Read the first line. It is now the 22nd of July, and all matters in relation to the purchase customer list have now been satisfactorily resolved. So do we have any disagreement with management on the purchase customer list? Do we have any disagreement with management on the purchase customer list? No. Has it been resolved? So do we agree with management value in use? Do we agree with management value in use? Do we agree with management indefinite life? So have we agreed to the management assumption of indefinite life? Have we agreed to the management assumption of value in use? Because the examiner is saying every matter relating to purchase customer list has now been resolved. So all matters relating to the purchase customer list has been resolved. Control C, and you go down and you write things over here. Purchase customer list. All matters in relation to purchase customer list has now been resolved. Now my question to all of you is, will this matter be reported in CAM? Let's see who is a good student. I just give you a definition of CAM. Right? Those of you who are saying yes, you are brilliant students. And those who are saying no, you need to revise your knowledge of CAM. Purchase customer list. Look at the definition of CAM I just give you above here. Look at the definition of CAM I just wrote in the session today. And after that, I ask you a question. CAM is a matter which is a high risky area. CAM is a matter which is an area involving estimate and subjectivity. CAM is for significant adjusting and non-adjusting event. Purchase customer list. Is it not meeting the definition of an area involving estimates and subjectivity? Is it not meeting the definition of an area involving estimates and subjectivity, everyone? Those who are giving the no answer. Those who are giving the no answer. Isn't an area of estimate and subjectivity? So now tell me, go by logics. CAM, key audit matter, if the purchase customer list is equal to an area involving estimate and an area involving subjectivity is equal to all matters resolved between auditor and management, between the auditor and management. Purchase customer list is equal to an area involving estimates and subjectivity is equal to all matter resolved between the auditor and the management is equal to, it is a material area. You can find the materiality. It's a material area. You can find materiality back at home. Is equal to, it's a material area, is equal to, it is a listed company, is equal to, METI is a listed company. METI is a listed company is equal to CAM. See this. So you need to be critical of knowing that which matter gets to CAM. Examiner was very clearly giving you a hint. Examiner was saying that the purchase customer list is an area involving estimate and subjectivity. Examiner was giving you a hint that all matters are resolved. There is no disagreement. It is a material area. And METI is a listed company. Now, I normally tell my student, those who take regular classes from me, that CAM is equal to LSP. CAM is equal to LSP. And my student knows it, or those who have taken the webinars from me also know this. CAM comes for a listed company. So METI is a listed company, first of all. Number two, CAM comes for something of a significant matter. Do you know the definition of a significant matter? Have I given you the definition of a significant matter above? Risky areas, adjusting and non-adjusting events, and areas involving estimates. Significant matter. LSP. CAM come for a positive matter. Was the examiner telling us it is a positive matter? All matters resolve. What if there would have been a disagreement between the management and the auditor on the purchase customer list? Would you have included a CAM then? Tell me this. Copy this formula from above and bring this formula down. Tell me who is a clever student. Purchase customer list is equal to an area involving estimate and subjectivity. All matter resolve. Let me write over here. There is a disagreement. There is a disagreement between the auditor and the management. See, I changed the statement. There is a disagreement between the auditor and the management is equal to, it is a material area, is equal to METI is a listed company. Then what will come now? Because it's material, so auditor will issue a qualified opinion. Am I right? So you need to know the logics well, that CAM will only come when it is a significant matter, but that matter has been resolved. CAM will not come for negative matters. CAM will not come for matters where you have disagreement. If you have a disagreement, then either you will issue a qualified opinion or you will issue an adverse opinion. You cannot have a CAM for a disagreement, right? And you cannot even have a CAM for a going concern issue. Because for a going concern issue, we have a separate paragraph in the audit report. Is everyone clear with some understanding of CAM? Because again, this is a webinar. I cannot give you every knowledge about CAM. But are you getting some relevance to CAM here? So now tell me, the report published by the supervisor. How many things are wrong in the report published by the supervisor? Let's make a checklist. Let's make a final summary of the report published by the supervisor. First of all, the report published by the supervisor includes a unmodified opinion. Number one. The second, it includes CAM for going concern. CAM for going concern. Second, thirdly, it doesn't include other information paragraph. It doesn't include other information para for chairman statement. And fourthly, it doesn't include a key audit matter for purchased customer list. So see the wrong in the report. First of all, it include an unmodified opinion when a adverse opinion should be published. Have I given you the logic for adverse opinion? When an adverse opinion should be published? Is everyone clear on that? Number one, please be quick. Include a CAM for going concern when going concern matter is not included in CAM. Have I given you the logic for that the going concern matter doesn't come in CAM? It doesn't include the other information para for chairman statement when there is a material inconsistency. It doesn't include CAM for purchase customer list when the purchase list is a subjective area. When a purchase list is a subjective area and all matters are resolved. So everything, when you say something is wrong, you have to justify this. When you say something is right, you have to justify this. So if there is something wrong in the audit report, you have to justify why it is wrong. And if there is something right in the audit report, you have to justify why it is right. So I think the report published by the supervisor include something when it should not be included. And the report published by the supervisor doesn't include something when it should be included. So there are 2 doesn't and 2 includes. I hope you're all clear on that. 5 marks. I hope you can write more than a 5 marks answer here. There are so much of the issues in the report published by the supervisor. So are you getting a clear analysis of this question number 3 of the June 21 exams? The 5 marks of reporting. And more importantly, I hope you're getting the knowledge about how to write comment on the methods, which relates to several issues in the case study, like the railway operating license and going concern, purchase customer list, and chairman statement. Right? I hope you got some productive learning from the day 3 of the webinar. It was just focused on one question, but I hope this one question must have opened your mindset about how you read, how you understand, how you identify, how you put the answer. Right? I hope you must have learned something around MURGC, something around CAM, something around other information. You must have understood something about writing the methods, the marking schemes. Right? So I hope this session must have given you something. If you can just drop your feedback quickly as we move into the last few minutes of the webinar. Okay, now one thing important. Tomorrow, when we meet up, we are meeting up tomorrow for something very, very important. And in the meantime, please keep dropping the feedback about the session today. Now, tomorrow is the 4th day of the webinar, right? And as per the schedule tomorrow, we need to do going concern tomorrow. Now, we already had a glimpse of going concern today, but I want to discuss with you a proper question on going concern tomorrow, which comes in the past paper. I think several times you must have seen in the past paper that the examiner publishes a full question on going concern, just like the December 18 exams. If I look at the recent paper, December 18, question number 2, I guess, was a very complete question on going concern. So if you have blur knowledge on going concern, if you have blur knowledge when to add an MURGC and when not to add an MURGC, the tomorrow session will give you a very good understanding about a question on going concern, rules of going concern, how going concern impacts the audit report, right? Then after that, in the last 90 minutes of the session tomorrow, we'll open up the data analytics, even though I've covered data analytics on my YouTube channel and even in my previous webinars. But I want to discuss the data analytics tomorrow with you from the view of the changes in the syllabus. I hope you remember the day 1 of the webinar. There is a change in the syllabus D2. And I told you in the day 1 session that I will be discussing the changes in the syllabus area D2 when I take on the data analytics article on day 4. Right? So tomorrow is very important, right? Because you will get to understand the changes in the syllabus area D2, how they can be tested in your exam paper. What is the significance of the article on data analytics for September 21, even though it has been tested a couple of times now, because it's now an old article, not a new article, and much more about the going concern question, because I believe going concern question seems quite potential for the upcoming exam settings as well. So I just want to assure that you know the soundness of the question. So very, very important agenda tomorrow, day 4. So I hope you have liked all 3 days of the webinar so far. You must have learned something out of it. And please also tell me, are you watching the previous webinars, which I am recommending? And are you reading the articles? Are you trying to apply the techniques which I'm guiding you on a day-by-day basis? So are you listening? Are you watching the previous webinars? Are you exploring them? And are they really benefiting you? If you're doing a self-study, there might be lots of students who are doing self-study, right? So I hope these webinars are helping you and benefiting you. Okay, so I hope to see you all live tomorrow in day 4 then of this webinar. So it's time to sign off from day 3, the 5th of August, and the day 3 of the AAA Practice to Pass for September 21 exams, being organized by ACCA Pakistan. I am your tutor Kashif Kamran, signing off from day 3. I wish you all a very best of luck for your upcoming exams, and I hope you reinforce the concept given to you by your tutor in this webinar. Thank you so very much for coming in the live session and participating enthusiastically. I'll see you tomorrow with the day 4. Till then, take good care of yourself. Goodbye and Allah Hafiz.